Hello and welcome to another video. In this video, I'm trying to do the Carnival Corporation. This is one of the cruise line, one of the top cruise line. And I noticed recently there is a quite of hype going on whether as an investor we should buy or not buy, and because the reason maybe the market is soon opening, and there is a speculation that okay, it will going to pick up. So there are three cruise there. So one is CCL, the ticker is CCL, Carnival Corporation. Another one is I think Royal Caribbean, and one more is Norwegian something. So I picked up the CCL, and if this video I'll get a good review. If you like it, I will put this similar video on the other two cruise and let you know my opinion on that. If you're new to the channel, I'll let you introduce myself. Pramod Kumar. I am a CFA charter holder and FRM certified, and my blog is riseanalytics.ca. In my channel, on YouTube channel, I covered the stocks based on the pure fundamental. I don't care short-term volatility in the market because my focus is on the long-term perspective, and therefore I go from the strong fundamental perspective. Okay, and so I have covered many other stocks. You can check on my website. Okay, so let's get started without further delay. So in this Carnival Corporations, right, what I am looking. So basically there are two things here. So, okay, so one is the economy, right? So let's keep aside the economy for now. Okay, I will provide you the detail, but I'll try to showcase what basically I was looking. So if I set aside the economy, for example, for now, and purely fundamental, okay, let me see how the company is doing, okay, and what are the things need to be considered. That's important factor for sure. We'll look into that factor. That's one of the important factor, the economy and how. So that's one piece. But I'm saying in addition of that, what other things? So this is the very asset heavy business, right? Those cruise or ships are very expensive. So barrier to entry and all those is quite expensive. So that's another factor which I am looking here is the conditions of the ships. Okay, because this company is also very old, so barrier to entry is good, but how about the condition of the ships, how much it costs into maintenance, right? So that's also very important factor to me. Okay, the next thing is this is quite a reputed company, but what's their returns? Is it, are they as the asset is generating good return? So that's one. And also from the liquidity perspective. So now I try to, so these are the major factors. I won't compare this to my earlier analysis on technology or any other group, because in that margins are very high, right? So that's very bad to compare this sector, which is the consumer cyclic sector basically, right? Because this is not like a year end, it's happening in cycle, to the pure technical or any financial sector. So I'm not going to do that. What I'm looking here is, okay, we know if how much the short term the liquidity they have, and how much they can survive, right? What they do, how much cash they have. So so now I think I have hopefully given enough overview of my framework and what I'm trying to do, and without any reading any noise in the newspaper and other thing, I just focus on the fundamental, and let's see if we can answer those questions. And if you, okay, so let's continue. So this is the Carnival Corporation, and I went to their this is a ticker, CCL ticker is right here. So this quarter, basically when they publish their quarterly 10Q, it's available on their website in the investor relationship section. I noticed they issue more debt, right? Which is obvious. So as compared to the last quarter, they issued more 207 million of debt. That's one thing. So that's was quite expecting. So I think that's okay. The next thing is, which I say, is the return on equity for this for the quarter is 7.72%, which is not bad. And but the return on investment capital is 3.80. Okay. So if you have investment in this, it's only giving right now less than 4%, which need to be think. One main thing is to come out is this their below book value. So right now this share is very let me explain you a little bit more on this one. So this share is heavily penalized, right? What I'm trying to say is, in the market value of is basically is 59 per it's giving 59% more discount. It's almost 60% discount. So this means if you buy the company as a whole and you sell its all the asset, so you will still make more the money. So it's below its book value. So that's what I'm trying to say, right? So that's from the Warren Buffett or Charlie Munger perspective, this is very cheap stock. I'm not saying, because I think when I already reviewed their portfolios, and so I'll say if their Benjamin Graham perspective, I won't say this is purely because I have read his portfolio of Warren Buffett, and if you want you can check out that video as well, his portfolio which had new stocks and old stock, and you know what I'm trying to say. So it's not, he focused on the growth as well, not only just pure literally cheap stocks. So this is a cheap right now, I'm trying to say, right? Okay, so that's one, and it's not bad, it is doing some growth. So let's go next, right? Let's focus on the liquidity side of the sections. Okay, so when I look into the liquidity ratios, so the very common ratio is the current ratios, right, which is low, 0.27. But I find I did not only this quarter but earlier quarter as well, which is in the same ballpark. So this means they are very dependent on the customer. So it was within this range. So it's more a little bit down, but not that. It was not that within the good time, it was quite high. So because maybe their operational margin or the current assets are very lower, right? The next more conservative than the current ratio, because current ratio, the short-term assets and the okay. So the current assets divided by the current liabilities give us the current ratio. In that one, we get the account receivables and all those stuff, not purely the cash as well, right? And certain inventories are there as well. So even including that broad the type of a short-term assets, it's still giving me very low, not even a 30% of my to support my current expenses, right? Current or can say current liquidity. I also have a video on that one which explain all these ratios on the balance sheet side or income profitability ratio as well. If you want, you can go and check it out. And when I do more on the deep dive, so it seems like this is on the they don't have enough cash basically to support that. On the profit side, I am not showing here on the profitability ratio, but on the profitability side this year, of course, it's negative in terms of profit because they won't receive anything. But on the profitability side, I notice it's pretty consistent, but for sure this year it's negative because there is no more booking and they're unable to operate. So that's obvious. So it doesn't make sense, and I don't want to make unnecessary the lengthy video, just want to focus on the core elements of the business, right? And one more reason for that I will let you know soon after 1 or 2 slides. I just want to maintain the suspense. Okay, so that's I didn't expect that such a big company is that to have that low on the liquidity side. At least they should maintain certain the cash there, but whatever it is, right? So that is okay. So let's me go to the next one. Okay, so when I go from the short term to the long term, and I noticed their debt to equity ratio is 27.56 and their debt over equity is 0.53, which is pretty okay. But the main problem here is I noticed the free cash flow, right? Even after generating the cash, right, or but this still doesn't have any free cash flow. So this means they are is minus 184 million. So this means they are very hand to mouth, right? So whatever is coming in the revenue, they are generating. So when I see this number, right, after doing some math, I was a little bit very upset, honestly speaking. I don't want to I just saying whatever I'm seeing as a number. I don't want to, if somebody at some time people are attached to certain ticker or stocks, so I apologize, but I'm seeing, I'm just letting you know. Okay, so because usually these companies should have certain buffer, that's what I expect, or even after generating certain cash, right? Because we notice here they generate 207 million cash, but seems like it's still they are in negative on the free cash flow. Then I went and this is the expert cutting from their 10K. I have put the link there as well, and I'll put in the description for you to check it out. This is a big red flag for me, right? I cannot just say this is a very big red flag. Let's read it this, right? We had a working capital deficit of 7.1 billion. So this is their deficit. They need this as of November. Forget about coronavirus or anything, right? November 30, 2019. Compared to the working capital deficit of 7 billion as of 1 year ago, right? No, November 30. So they have in 2018 7 billion and it increased 0.1 billion, right? So 0.1 billion increase in terms of a deficit. And what they are saying that the increase in the working capital deficit was caused by decrease in cash and cash equivalent and increase in the customer deposit, partially offset but decrease in the short-term debt, right? So that's because they have not enough cash. They are clearly mentioning that. And 7 point, forget about these two even line. And they also mention very clearly, we operate with a substantially working capital deficit, right? So 7 billion to generate is not good, right? So sooner or later, if this continues happen, then maybe their debt ratings goes down. So this means they have to, if right now it's good, I haven't seen any issues, so maybe their debt ratings or maybe they have more expensive, or maybe they have to dilute their liquidity or get more, because from somewhere they have to pay this, right? And if they are not getting the customers, or you never know, right now maybe they're trying to say, okay, by August or sometime they're trying to open, but if they won't open, or let's say until next year, right? Just for the safer side, if they start getting order, because in their in the news I was reading as well that in their news they are reading that they are canceling it or giving some credit to the customers for the next year. So most of the customers are canceling, right? But it takes some time for people to come up with this coronavirus. I just have one more statement. So then I went to their cash flow statement and tried to see from the expenditure, what the hell is happening with their cash, right? So let's go from the bottom line, right? So you see the net cash used in investment activity is $3.1 billion. Why they need $3.1 billion in 2017? $1.4 billion it's ongoing new shipbuilding. Okay, that's okay. But you see here, right, ongoing new shipbuilding program. So right, they need this capital, and $1.5 billion is for ship maintenance, ship improvement and all, and 203 is just used in the, so this means 1.5 billion is a very big number, right? And 1 point they aside to build. So this means they input heavily to the new ships. Maybe their ships are going bad or something. So that's why they need to the newer ships and all. Same thing. You see this number grows from 3.1 to 3.5, and this ongoing new ship programs goes to 3.8 billion in 2019, right? So that's, I say, come on, this is too much. So this means they need to maintain or their ships, and also they're getting some sales of their ship, right? 389 million. You can see here. So that's it. So once I read this, then that's one of the reason I don't even bother to look much further. And then I said, no, I should step away from, at least from this company. I'm not sure about other two companies. So that's it from my side on this video. And if you like it, my analysis, the fundamental of this the video, please subscribe to my channel and like it. On my channel there are some other videos. Share it if you like it. More and more people will view it. And last but not the least, if you want me to cover other two stocks, Norwegian or Royal Caribbean Cruise, so kindly put in the comment, and I can do something similar to these. And that's it. So thank you from my side, and thanks for taking time to watch this video. Thank you, and see you in next video. Bye for now.